So why am I doing this? I'm starting this podcast because we all have a story and finances play a part in our struggles and successes. If we can learn from the many mistakes many others have made, we can make sure that more of us are successful. Like the quote says, to increase the chances of success, we must increase our failure rate. To be honest, I failed a ton. I will bring people from all walks of life, but mostly service members. If you have a story you would like to share, do not hesitate to reach out. From the go, like and subscribe to this podcast so many others can benefit. So we're back at a Financial Enabler podcast. We took a hiatus. We were working through some issues, but we're back and we're back with some great people. Today, I have something really good because I always talk about saving in taxes and what we could do with that money in order to lean into the future. So today I have Josh Ramirez, who's an enrolled agent working in Florida. He's licensed in all 50 states. So if you ever have a tax issue, this is probably one of the guys that I'm gonna send you to. So Jose, how you doing today?
Good, man. Good to see you, Jamie. Thanks for having me.
Of course, bro. So I wanted to start with this because I as I've dove in deeper into finance, I realized that a lot of people don't know what an EA is. And most people, I just had a guy yesterday say, we're talking about finance and what to do with budgeting. He's like, I'll just talk to my CPA. And I'm like, why would you talk to your CPA about that? He doesn't know anything about that. So can you explain what the difference is between an EA, a CPA, and what do you guys do?
Yeah. So Jose Ramirez, Chief Tax Strategist with Advanced Tax Advisor. So I'm an enrolled agent. What that means is there are three categories that can represent the public in front of the IRS. Normally, there's three licenses, right? We have the EAs, enrolled agents, which is a federal license issued by the U.S. Department of Treasury. Then we have the CPAs. The CPAs are accountants typically. They don't always specialize in taxation, but they can, right? Some of them do. And that's usually a license that's issued by the state, wherever they practice it. And then you have the attorneys. Tax attorneys also are licensed to represent the public in front of the IRS. So those are going to be the three licenses, and all these three individuals can help you with taxation. However, I would say that, I don't like to focus too much on the license. I like to focus on the individual's experience, right?
Right.
If somebody is an attorney that specializes in taxation, yeah, they could probably help you, right? If somebody's a CPA that specializes in taxation, they could probably help you. Yeah, sure. But don't assume that they all know tax, right? I would say even EAs, their specialty is taxation. That's because all of the education and the exams that we have to take, it's 100% taxation, right? So that's the biggest difference. But like I said, I wouldn't get hung up so much on the license. Just focus on the person's experience, right? If they are tax advisors and they specialize in tax planning, that's what you want to use. You want to focus on tax planning as opposed to just tax compliance. Because tax compliance is basically preparing the return. Preparing the return is great because if you prepare it timely, you file it timely, you're not going to be penalized. But at the same time, you always want to focus on planning as well. This is how you save money in taxes, by implementing the planning.
Right. That makes sense. And correct me if I'm wrong. The way that I understood it is the people that just file taxes are generally, assuming they're really good, they care about saving me taxes today. While you guys are trying to save me taxes in years to come, we're leaning into with a future strategy, not just immediately not just what happened last year.
Right. So a tax planner, a tax advisor planner, is going to look at a long-term view, right? A long view, 5 years, 10 years, 20 years. Where your business, having conversations with the business owner is always going to be important on a regular basis because we need to understand where you're going as an individual and as a business owner. When are you planning on retiring? How many assets do you think you're going to accumulate in the next few years? How many employees are you going to have, right? All of these play a part in planning, especially around the assets, especially when it comes to real estate, because there's tremendous opportunity when you start engaging in real estate in real estate investing. There's a huge opportunity in terms of tax savings. So a lot goes into it, right? You have to really understand the individual's individual requirements, business requirements, and how we can capture some of the things that they're already doing and make them deductible, right?
Right.
Incorporating themselves.
So what point in your opinion, because so my audience is mostly service members, a lot of them use the VA loan. I think a little bit less right now due to the market conditions. But at what point, or what are your best tips to become an investor? I know that there's certain things that you got to be a registered real estate investor, or I forgot
the real estate. Yeah, right. So the real estate professional status, that sort of thing.
Right.
So that's a great question. Yes.
At what point can people really start taking advantage of those benefits outside of just, I own a few homes?
Yes. So usually you start out with one, right? You start out with your first investment. I mean, if you're a W-2 employee and you're a service member, you get a W-2, you get a salary, eventually you're going to get out of the service and figure out what to do next, right?
Right.
I encourage all W-2 employees to start investing in real estate. Start with one, one a year. Then you go to 2, 3, 4, 5, and you start building that, that snowball effect of real estate. To answer your question about the real estate professional status, to qualify for the real estate professional status, you have to have more than 750 hours in the real estate industry, and the majority of your personal service has to be in real estate. There's 11 categories that you can participate in. Now, it wouldn't really apply for people that are full-time employees, because you can't have 2 full-time jobs, right? The IRS is not going to buy it. I mean, this has been argued in court cases. There's court cases on this. Full-time employees is very hard to meet the 750 and above time quantitative test. So this would be for people that are doing real estate full-time. The majority of their time is spent in real estate. Now, what this does is it removes any limitations on the passive losses. So you may have heard that real estate produces losses, right? Rentals produce losses because there's the depreciation component of the real estate. The depreciation is a non-out-of-pocket expense, and it's not a real expense that you take on your tax return. You get to depreciate your residential property over 27 and a half. I'm getting technical here, so bear with me.
I like it. Go ahead.
So let's just say that you buy a property for, I want to make up some numbers, $375,000. $375,000. We back out the land. We're going to say that the land is valued at $100,000. So now you have a building that's the basis of that building is $275,000. The IRS allows you to depreciate that property over 27 and a half years. But what that means is that you can take a $10,000 deduction on depreciation every year, right?
Right.
So that deduction usually produces a loss because the rental income, the operating expenses, it puts you at a loss, right? Normally, that loss, because it's considered a passive loss, you can't apply it towards your W-2 income. There's some limitations, right? Depending on your income. And the limitation is up to $25,000. You can, but anything beyond that, you can't take any losses against your income. Now, the real estate professional status, what it does is it removes that limitation. And it allows you to elevate that passive loss to non-passive loss, as long as you materially participate in the activity of managing the property and things of that nature, right? There are 7 tests. You have to meet one of the tests, material participation test. And then that passive loss, now it goes from here to here. We elevate it to non-passive. And now if we have a $25,000 loss here, we can apply it towards our $150,000 W-2 here. Now it reduces your income by $25,000 and you're saving that much in taxes.
Wow.
So it's pretty powerful as long as you know what you're doing, you're tracking your time, you qualify for the strategy. In fact, I have clients who are real estate investors full time, and they qualify for the strategy because they're in real estate full time. They have more than the 750 hours, and this is all they do, right? So let's just an example: a real estate investor making $300,000 on this hand, right, from flipping property or doing rehabs or wholesaling property. And on this hand, they have $300,000 of losses from rental activity because maybe they're doing Airbnb, they have multiple rentals, and they've accumulated enough rentals so that it produces enough loss, right? So now, because they qualify for the strategy, they elevate this passive loss, if they qualify, right? They elevate this passive loss to non-passive loss, and they can offset their ordinary income here. So what's 300,000 minus 300,000 is zero in income. You pay zero taxes on zero income. right? So it's very powerful. It's very powerful if you're doing it right, and if you're planning ahead, right? I feel like I'm talking forever. So
No, dude, this is good because I want to get technical with sometimes when we go in a long form. So with for passive activity loss rules, is it possible to do it just as a business owner? Like, could I own a property management company, and does that give me the status?
yes. So because property management is one of the activities, one of the categories within real estate that you can do. So there's 11, I don't memorize them, but there's 11 categories. We're talking about brokering deals, construction, reconstruction, acquisition, property management, rentals, right? All these categories qualify for the activity qualifies for the real estate professional status. As long as you're doing one or multiple, and you have the 750 or more than 750 hours a year, and the majority of your personal services are in real estate, one of those categories, then you qualify for the status. But then there's a third test, right? So that there's two quantitative tests: the 750 and the more than 50% of your personal service has to be in real estate. But then to be able to use the losses from the rentals, you have to materially participate in the activity of that rental business. I don't want to call it management. It could be management, but you have to participate, in the management, I guess, for lack of a better, I think that's the perfect word, for the management of the property. And some of the tests are going to be something like 100 hours a year. Nobody else has more time than you managing the property, or 500 hours a year. Those are two of the tests that come to mind. 500 hours a year, and it doesn't matter how many people participate in the activity, but you have to track the time, right? If you meet those tests, now, you have a huge amount of advantages in terms of tax deductions and tax reduction from the depreciation. And then there's another component. There's another component that you can add to the rentals. You can actually do a cost segregation on the properties, which will accelerate your depreciation on the properties. And that accelerated depreciation can produce somewhere around 20 to 30% in depreciation from the purchase price of the property, has been my experience. So that's pretty significant, right? So now going back to my example of the $365,000 property, instead of depreciating $10,000 a year, now the first year, potentially, you could be depreciating somewhere around $50,000 the first year, which is huge, right? Because that can really offset your ordinary income. And if you do that every year on multiple properties, you can see where this goes. You can see how you can save a tremendous amount in taxes while accumulating real estate, while getting wealthier by accumulating real estate every year, right? So real estate is powerful. It's very powerful.
Yeah, I've sold 2 houses. I currently own 3, and I'm looking at what I've realized is so you and I spoke about this, that I'm a big believer in the multiple asset classes, right? And but I do strive to, as I start making more money, I know that I want to start continuing to buy. Obviously, I don't want to be too involved, so whatever's simplest. So maybe my next house is, eventually I'll go commercial, but for the meantime, I'll stick to single family. I'll find a property manager, put it up, and move on, right? So that's cool.
Yeah.
What about for because again, Marius being so young, right? What would you say if you could look at, did you start as an EA and in the tax side in your career, or you had a different path?
No, actually, I was an accountant for maybe 13 years before I transitioned over to taxation. So I was in the trenches, man. I worked for a publicly traded company I was a senior accountant for a publicly traded company doing financials that got reported to the SEC. They were audited, pretty complex stuff. And I also was a financial controller for the private sector, businesses with revenues ranging from 5 million to 100 million. So I had a very good understanding of accounting before I transitioned into taxation. So accounting and finance and taxation has been my world for the past 24 years. I know it pretty well.
Awesome. Yeah. So, so now if you had maybe your son, right? Or somebody in your nearby, right? 19-year-old kid looking to become wealthy, right? And learning to, I always tell people the number one fee you'll ever pay in life is taxes. So what strategies, how would you tell them to think about moving forward? because, and again, outside of real estate, like, and I'm ruling out real estate just because you already went deep on it. What else should they be thinking about?
Yeah, when you're starting out, like I do it to my daughter. My daughter's 18 years old, and she has helped me in my business for several years, and she gets us out. And she's got, she's got a job now, but she's got a salary. Right. So since she's been 10 years old, she's been funding her Roth IRA. That's a great strategy, especially when you're a child, because you don't even realize how much it's grown over the years. Funding your Roth IRA is invaluable. I mean, if you fund it every year, I think the limit went up to 7,000 this year, 7,000, something like that. So if you fund it every year, you max fund it for 30 to 40. If you're in your 20s, you do this for 30 to 40 years, you're going to end up with a couple of $1 million in that account, and you're not going to put in that much. Now, the beautiful thing about that is that account is growing tax-free, right?
Right.
All that gain, that the growth on that account is tax-free. So when you retire, you pull that out, you don't pay a penny in taxes. Right. That's number one. Those are simple things that you can do on your own. You don't really need an advisor for that.
Yeah. But I remember, right, to start your kids, they have to be getting a salary.
They have.
So nobody, due to a child employment laws, pretty much the only way to do that, for what I understand, is I must have a business and I must hire my kid, and then I can fund it. Am I getting that right?
That's correct. Now, you just don't want to hire your kid for the sake of hiring your kid. You want to make sure they're actually working in your business and you're paying them a reasonable wage. You can't overpay them or underpay them, right? Pay them a reasonable wage. They earn their money. The money goes directly to them into their account, and they do whatever you want with them. But of course, you want them to do the Roth because it's a great benefit to them.
I'm sure. And I could pay my kid $7,000 a year to sweep, mop, and pick up trash.
Well, especially if you have real estate, right? They can help out. They can help out in the real estate. They can mow the lawn. They could do so much for you, right? So, I mean, that's a huge advantage. And now you're teaching your kids about money, right? You're teaching your kids how to save money and how taxes work. I'm explaining to my daughter all the time. See all this money that you have in your Roth IRA? You're not going to pay taxes on that ever. That's like free money to you. That's, well, not free because you work for it, but the gain on it is going to be free. So she starts, putting two and two together. She understands how this works. It's pretty cool. The lesson there is invaluable.
Yeah. And now I want to take a quick segue on this one on 529 to Secure 2.0. With the new Secure 2.0, with a rollover of the 529 to a Roth IRA under $35,000 and this is something that I've been talking to people. If they have a 529, you make sure that you're under 35. By the time they're 18, you roll it to a Roth IRA, you set it and forget it. Right? Is that kind of where you guys are also talking with that?
I'm not too familiar with the 529. That's something I would have to look up. But is that something that you're doing now? Yeah.
So we talk about it because 529 said the ones for school, right? But Secure 2.0 allowed the rollover of up to $35,000 into a Roth IRA. So now that money that was only for school, now it can be used for maybe, and I'm not going to see other things, but in the future for the kid. And obviously, like, as we talk of whatever the major.
It makes sense. And if it makes sense, right? 530, if you're not going to use it for school, might as well use it for your investment accounts. It makes perfect sense to do that, to roll it over.
Right. Yeah. So going back to what we were saying, outside of kids, what else would you tell a 19-year-old to start learning about or thinking about when it comes to saving money on taxes?
Well, unfortunately for the W-2 employees, you're pretty limited. You're limited to how many deductions you can take. There's not much you can do other than planning around your retirement accounts and things like that. Eventually, you want to buy your first property. That's a kind of a segue. I don't know if I want to call it a segue drug into business, right? You buy your first rental property, right? And then from that rental property, you start learning how to operate it, how to manage it, and how to capture all the operating expenses for that rental property. And it creates a loss normally. And that loss, as long as you're earning under 150,000, don't quote me on this. There's a range between 125 and 150. The losses can be applied towards your ordinary income up to 25,000.
Yeah.
So that's a start, right? And then eventually, you want to be a full-time business owner, because the full-time business owners are the ones that are getting the most benefits in terms of tax planning, in terms of being able to deduct anything that's associated with the business, which a lot of it could be, right? you and I meet to talk about this podcast, you and I meet to debrief and have a meal over it, have lunch or dinner, that will be a deductible event because we're talking business as it relates to this podcast, right? So now the menu kind of opens up for you. Like all these strategies, all of a sudden you can do so much more as opposed to just being limited to retirement accounts and maybe insurance, things of that nature.
So I'm gonna ask you about insurance because I'm interested in that too as well. Because I'm a big believer of like understanding all the asset classes, and this is something that I try to convey to people is that even if you have even if you're a W-2 employee and you believe that you're really busy, there's a point that learning a business, a side hustle, something can yield way more money than you expect, even if you just learn how to write off stuff, right? So is that something that like whenever, I'm sure that you get W-2 people, do you advise them to consider a business outside of real estate? Because again, some people just don't do it, right? So how do you phrase that to people?
Sure. I mean, I have W-2 individuals who are very creative and very clever, and they get into, for instance, Turo is pretty popular. It's been popular in the last couple of years. Turo is where you rent out your car. Now that becomes a business. You get to write off your car, depreciate your car, right? Others, I have one that bought an RV. They rent it out, and that becomes a little side hustle, side business for them. And now they have an additional business that they can take write-offs on, right?
Right.
Anything that's any side hustle. I have people that do online stores, right? Any of these little side hustles can help you reduce your tax liability because the IRS understands that when you're starting a business, you're most likely going to have losses the first couple of years because you're trying to figure things out. You're trying to get business going. You're trying to grow this thing, and it's going to probably cost you more than what you're making, and that. Those write-offs is going to offset your W-2 income because that's considered a non-passive activity. That's considered ordinary income activity, the side hustle. So anything that you can think of. I mean, if you're like, for instance, if you're into, when I was younger, I had an online Amazon store. I tried it for a few years. It was fun. I had a cigar shop, a cigar humidor store that I sold a bunch of things. I was young, my 20s, and I was able to write off a lot of things. I mean, I was able to write off not only the cost of goods, but, whenever I met with vendors, whenever I had to go to like expo shows in Vegas, my trips were all written off, right? Everything was a write-off because it was part of the business.
Yeah.
So you have more opportunity to incorporate some of the things that you're already doing because you're part of that business, but it becomes a deduction to you. And so it helps you tax-wise.
I love that because I've been telling my audience is that so in the military, call taking time off, you take leave, right? Yeah. And I've been telling people you can write off your leave. You just have to do a business function in that time. So a lot of people don't get that. They're like, my mentor, and we went to Costa Rica. The whole trip was a write-off, right? Because I planned for this and I've been building my business. So what a lot of people forget that not only do you have to do it right, ordinary and necessary and ordinary, but once you start learning this game, I am convinced that I would have rather taken a loss for 3 years and learned this game, paying somebody, so that year 3, be like, cool, I can write off everything, right? But so many people delay it. I'll do it in my 40s, but if you set it at 20,
oh man,
crazy.
If you start at 20, you have so much of an advantage. You have so much time to learn this game, and that's what I talk about that too. I do a lot of webinars on the monthly basis, and I talk about the fact that business is kind of like playing a game, right? And there's different levels. There's different levels to this game. When you're starting out, you're trying to figure stuff out. It's kind of like when you're playing a video game. Like you know what you're doing, first play it, and then you learn and you get to the next level, right? Business is the same thing. I mean, in the beginning, you're gonna have losses. You're gonna lose money. You're gonna do this, that. But then once you get past that and you start making money, all that money that you make, you can invest in other things like real estate. You can invest in the growth of the business, and everything that you're doing from that point on can trigger more tax planning, more benefits to you for you to keep that money without having to pay so much taxes on it, right?
Yeah.
So it depends on where we are in business, right?
Yeah. And I like what I do in my business and with my meetings, and so most of my audience, they live in the dorms in the barracks. And I'm like, guys, if you started doing what I do, you made some money, all of a sudden your internet's right off. You going out to have lunch with your business partners are right off. Your cell phone. Like, I understand those are your only bills, but now your only bills are something that helps you. Right. So I've kind of crunched some math, and I was like, these kids are waiting to get the special the pay to be able to move off base. And I'm like, if you leaned into this, you could do it on your own, right? You could build your financial freedom. And again, the like you're saying earlier, like about with your daughter, the trajectory changes so much faster the earlier you start.
Oh, absolutely. I wish I would have known this. Yeah, absolutely.
Like I learned about my Roth IRA. I had to fix it because my financial advisor totally I'm not going to say messed it up. Didn't do it as well as I think he should have, right? And I've had bad insurance products, and now I have good insurance products. So I'm learning about that. So with that, what is your thought process with insurance products, and how does it play into planning with taxes?
Yeah, great question. I mean, there are some products out there that are really good. I always tell my clients that first start with your Roth IRA. Once you maxed out your Roth IRA, then you can look into other things, right? You can look into potentially a simple IRA for the business, depending on how many employees, because there's planning around that too. Because if you have employees, then you have to fund it for everybody. So there's some planning around that. Then you can look into IULs. IULs are pretty good depending on the company. Not every IUL is created equal. Some have more expenses than other.
Right.
I like the IULs for the what do you call it? I like the fact that there's a floor, like you don't lose any money. And once it gets to a point that you're pretty high up there, you've had it for many years, 20, 30 years, all that growth and accumulation, you can get that money back tax-free. You get your money back tax-free, and then the difference you get it as a loan, which you don't pay interest on. So it's a pretty cool deal. Now that I like those as an add-on to other things, right? I don't just focus on insurance, but that's like an add-on, kind of like what I was saying earlier. There's like levels to the game,
right?
Once we get to the level that you need an IUL, that's when you get it. I don't usually say to business owners, if you're not doing a Roth, you shouldn't be looking at it. I do a Roth first, right? Then an IUL.
Yeah, I think that I suggest to people the IUL post Roth TSP, Roth 401k, whatever, and post Roth IRA, unless you're in the military, because then, like I spoke the health concerns that, and one of the biggest things that I love about an IUL is that those loans, right? Like there's people buying crazy properties at a ridiculous interest rate.
Right.
You can use it as a bank. If you use it that way, then I'm okay with people allocating some of that money into an IUL. Do you have I don't know if you can say, do you have a preference in companies that you like from the tax side?
I mean, it changes. Like recently I've been looking at, and I actually wrote it down, at least I've been looking at National Life recently and Adeco, only because I heard, and I'm doing some research on it, I heard that their fee structures, it's more favorable to the insured. So, I mean, I have a Transamerica policy, but it really depends. I mean, it's just really about running the numbers, which was going to perform better. And the way the thing is that people need to realize is the way they're structured is important, right? And you can't just go to anybody and say, hey, give me an IUL. The person that you're dealing with needs to understand the IUL so that they know how to structure it, right? Because if you have too much insurance on there and very little savings, that's not going to help anybody, right? So you want to make sure that the person is doing it, and you understand because you do this yourself.
Yeah, I definitely started because it's a good tool to have, and nothing makes me happier when a kid is like, I want to put in, I'm young and I want to put in, let's say they're not max funding the Roth IRA, but they're like, I'm putting my 5% into Roth TSP. I want to put some into my Roth, and I want to start this other bucket. I was like, great. As long as you understand what you're doing, let's do it, because the effect on their life is going to be so crazy. It's just going to be out of control. So awesome. Now, I do like talking about other stuff because, and I want to ask one question when it comes to money. When you were coming up and, growing up, what was something in your life that like a negative view of money that you got from your world?
Man, that's a question, huh?
Yeah.
A negative view of money. I mean, maybe, growing up, you always heard that you have to um, save and not waste money, right? I always heard that, and I always heard that money doesn't grow on trees; it's hard to get, all that.
Yeah.
But really, there's some level of truth to that. But at the same time, if you're providing a good service to the public, money just comes, right? If you're a business owner, you're doing right by people, offering a great service that's going to help them long term. Money just comes, it's kind of the byproduct. It's like kind of like the byproduct or the effect of you being a good service provider.
Yeah.
But little things like that. I mean, I guess that kind of is. I think it scars a lot of people, like thinking about money in a negative way. But listen, we need money, right, to live, to do the things we got to do, to take care of our families, to take care of our kids. So, that's what we do. What we do. We like helping people, but we also like having a good life. Making money as a business owner.
Yeah. And to that, it leads to my next question is like, and you clearly outgrew those negative views of money. So what is something, because I assume you make a good bit of money, what is something that you always splurge on? You go all out. Like there's no questions. That's like, you don't even look at the price tag.
Man, lately, I mean, I always look at the price tag. That's something that I always do, but I don't let it stop me. Lately, the older I've gotten, traveling, I travel a little less now, but when I do travel, I like to enjoy myself. When I go out to a restaurant, there was a point in my life that I used to start reading the menu from the right to left to look at the prices, right?
Yeah.
I don't do that anymore. If I like it, it's like, I'm getting it, right? So it's, I splurge on restaurants. My daughter likes restaurants. It's fun.
Yeah, I think that's something simple that I've learned in this journey is that something as simple as just reading the menu from left to right, right? Once you're able to do that consistently, because it's consistently, right? It's not when you walked into McDonald's, right? You walk into, and it's so funny. My girlfriend and I, we went out to eat the night. Oh, which actually, you just reminded me. We think we got screwed. So they gave us the bill and it was super expensive and we left. And then we were like, how do we pay so much?
Yeah.
It doesn't add up. I was like, and that's when we started thinking about money. I was like, there's a point that we think we got screwed. But yeah, like you just do it and then you just deal with that, whatever the price is. And it gives a whole nother sense of freedom. Yeah. Now, what is something else as you see the future of America and where do you see the market going? Do you think taxes are going up? Where do you see the economy going? And by the way, for anybody, this is just an opinion. I have this guy does not have a crystal ball.
Right. Yeah. I mean, I have no idea where the economy is going to go, but the way things are looking is, taxes are probably going to go up, in my opinion. Taxes are the lowest they've been in a long time. I have a chart of the historical, tax rates since the IRS was created in 1913. As soon as it got created, it went crazy up to the 60s and 70%, 80s. The highest it was 90s. And then it went back down, right? In the 80s, Reaganomics and then Trump, they're pretty low now. 37% is the max rate for the IRS. So we'll see where it goes. I mean, I'm inclined to think that taxes are going to go up. So I always tell my clients, if you can do an investment that is post-tax so that you don't pay taxes in the future in retirement, I say do it, right? Because not only are you going to be saving in taxes on the growth, but you're going to be saving in taxes overall because taxes are going to be higher in the future, in my opinion, right?
Yeah. Yeah, definitely. And
in terms of the economy, I mean, who knows? We'll see what happens with the election this year, right?
Yeah. I don't even know what's going to happen with that. So what is, let me ask you, if a service member wanted to reach out to you, which like every business has a threshold, at what point are you open to work with people?
Yeah, so we specialize in business owners currently, but I love to help your audience. If you're a service member, W-2 employee, what I can do is I can probably give you a link so that you can give to your audience and they can schedule, tax return preparation consult type of thing. But I'll tell you that our specialty is business. So we're doing them, I guess, a favor to talk to them, and we can do a free consultation if they need it, if they needed it.
Yeah.
Yeah.
Okay. So I'll be looking at that, because if you give us a link, that'd be great, because man, there's so many people that are averse to paying for education. And I'm like, and I tell people, if whatever this costs, if you can afford, I'm just going to throw a number. Let's say $1,000, just to throw a number.
Yeah.
If you pay $1,000 and you learn a lot about your taxes, and you set your taxes right now, it's going to change your whole life, right? You're going to change how you see everything, because you start learning about the game,
If it helps you think differently also, not just, if it helps you think, like I try to educate my clients in a way that you have to really change your mindset, right? You have to think like a business owner. You have to think like, okay, so do I need to spend this money? If I spend this money, is it deductible? If it's deductible, it makes sense to spend it. If it's not deductible, why am I going to spend it? So getting into that mindset is pretty powerful, right? Because now everything becomes an opportunity. Everything becomes a business opportunity. So if I'm going to meet, I don't know, I'm going to give you an example. If I have to, I have clients in South Florida. So if I wanted to meet one of the clients and have dinner with them to talk about their finances, that would be a deductible event. If I wanted to buy some t-shirts, so this t-shirt is branded with my logo, and I use it for marketing purposes. If I wanted to buy some t-shirts, I would probably do something along the lines that is branded so that I can write it off, right? So I try to incorporate as much as I can into my business. And that is the mindset that you want to have, right? As you're living your life every day, you look at things and you say, okay, how do I make this part of my business? How do I incorporate it into my business so that it can not only help you make more money because you're incorporating more activities into your business, but lower your tax bill, right? Yeah. So that's a mindset. It's a mindset issue that you can actually adjust. I do it all the time.
I had a guy ask me, it's like a lot of service members want to buy tactical equipment, tactical gear. And I was like, bro, you got to come up with a way to find a business, right? Like in my current business model, it doesn't make sense for me to go buy a helmet, right? Yeah. But people got to get creative. And if you find ways, the IRS code, like I personally have taken the approach of the tax code is there to help me, not there to restrict me. Right.
Yeah. So, as long as you understand it and you know what you can do with it. The tax code was written in a way that is hard to understand, but once you do, you can do a lot with it. Right.
Do you still find that you're learning stuff in the tax code that you're like, man, I had no idea about that?
Oh, every day. I mean, the tax code is huge, right? And the laws are always changing. In fact, there's a new law being voted on right now. What's the name? Families. I can look it up and tell you, but whatever. There's a bill being voted on right now. It just passed the House. It's sitting with the Senate. The Senate is voting on it. So if that passes, there's going to be some changes where it's going to extend the bonus depreciation, the 100% bonus depreciation, which went away in 2023 from 100, it went to 80, and 2024 from 80, it went to 60. So that's going to extend it till 2026 at 100%. So that's a huge benefit for real estate investors, business owners. There's something else on there about the R&Ds that it will allow you to spend expense for R&D expenditures while getting the R&D credit. So yeah, there's always changes to the tax code. There's always changes to the tax law, and you have to stay on top of that.
Yeah. And I felt really happy with that because I bought a truck in 2023. And now when I was like, oh man, might be get 100% bonus depreciation, I was like, this is great news, right? Now the next thing that I need to talk with my team is how do I start doing R&D? I don't know if it's possible for the average business owner, but I'm sure there's...
Yeah, R&D has to do with, research and development. So if you're doing any research and development, something that's unique to your business, most likely it will qualify. Like I have a couple of clients that do software development. And that will be considered, some of it will be considered R&D. Right. So depending on your business, right?
Cool. Dude, that's awesome. So now if you've given us a lot of information, and I'm gonna post all your information in the podcast, both on all the platforms.
Yeah.
But what's your what is something that you like? I know you like traveling. I know you like hunting, and we want to go hunting together. What is other things? What is the craziest things that you've seen business owners write off?
Oh man, the craziest things. When you say craziest thing, what does that mean? Like something exotic, or? I mean, I don't know. I mean, the most amount of money that people write. I mean, I've seen, I've implemented personally. I've implemented strategies where I've saved clients hundreds of thousands in taxes because we implemented some real estate into the business, and it's cost segregation, accelerated depreciation. I've also seen the craziest case that I've ever worked with. I'll tell you some of the details, but I had a guy was referred to me. He was in trouble with the IRS. He ended up owing the IRS about $6 million in taxes. After penalties and interest, he ended up owing over $7 million in taxes. So he came to us. He was distraught. Yeah, it was incredible. I'd never seen anything like it.
Yeah.
He was distraught. He was kind of fending off the IRS on his own, and we got involved. We determined that we could help him. We said, yeah, we're going to help you. And we got involved, and we ended up negotiating his tax debt to a partial payment plan where he ended up paying about $21,000 in total to the IRS for that $7 million tax, which was a phenomenal deal, friend. The guy was over the moon, right? I mean, that's like unheard of. So that's probably the crazy in the sense of the amounts, right? There was a lot of money in taxes that he owed that he couldn't pay. We were able to help him. So that was a pretty good day for him.
Wow, that's really cool. What about any cool write-offs? Like I don't know, like something exotic, right? Outside of like a jet. Have you ever heard of like people writing off a cool gun or I don't know what else that comes to mind, but
yeah, not me personally, but like a cool gun would have to be something that if you're like in security work, right? If you need these tools for your job, I'm trying to figure out how to write off my guns. I can't. As a tax advisor, I don't need guns, right? But
you just can't write them off.
I mean, yeah, I need them personally, but not for the business, I guess. So I mean, you and I got to get together and play with our guns one of these days. But yeah, I mean, cool. I mean, I've seen some people write off. I mean, the most lavish thing would be the jets, right? Jets. Yeah. But for the most part, my business owner clients, I would say, real estate. Real estate is a big part of it. R&D credits, that's a big part of it. And then just planning. I mean, you can always do the small things that you don't need a tax advisor for. The small things are going to be things like if you're starting out a business, you can write off your home office, right? Keep track of your square footage. If you're renting an apartment, the square footage that you dedicate to your home office, that's a write-off to you. Right. Keeping track of your mileage, so you can either reimburse yourself for the mileage or deduct it at the end of the year, depending on how your entity is structured. Right. Little things that you can do on your own that you don't really need an advisor for, right? As long as you're tracking it. But I'm trying to think back to your question. What's the most exotic thing? I mean,
yeah,
not me personally, but I've heard of somebody writing off their protection dog before.
Oh wow.
One of those $50,000 dogs that are like killers. Yeah, they use in the military, right?
Yeah,
I've heard of somebody writing off one of those. And I'm not sure how they did it, but it was probably some sort of a protection for the facility.
Yeah,
right? It was a dog for the facility, so that's pretty cool. I mean,
that's awesome.
Yeah,
that's really cool. Yeah, the world of taxes is really fascinating to me, and how we save people some money and get more people to wealthy, right, to live these exceptional lives.
Yeah.
But dude, this has been absolutely awesome. I'm sure we'll bring you back up with more stuff as the market changes. Where can people find you?
Yeah, you can follow me on Instagram. I do a lot of tax tips on Instagram. I do a lot of videos, kind of like you. We know I love the content you're doing, by the way.
Thank you.
There's great content. Kind of like you, I do videos on Instagram. My handle is Chief Tax Strategist. Mm-hmm. And Instagram's going to be my biggest one. I also started posting on TikTok, but I'm not that big on TikTok yet. My website, advancedtaxadvisors.net. There's some information about that, about us on that. Follow me. Get some free tips.
That's awesome. I'll definitely be tagging your stuff. And dude, this was absolutely awesome. I'm stoked to talk to you some more, and I'll catch you soon.
Yeah, you got it, brother.
This podcast is not financial advice, and it only represents the opinions of those participating. Our goal is to get you to your version of financial independence. Please follow and like on every platform.